Hello and welcome to the webinar, Reduce Compliance Risks Within the Indirect Tax Space. My name is Megan Billingsley from CFO Dive Studio ID, and we're glad you could join us today. Please note the slides will advance automatically throughout the presentation. In this webinar, we'll be hearing from Larry Mellon, Tax Director, Chief Tax Office with Vertex. So thank you so much for taking the time to speak with us today, and now I'll hand it to you, Larry.
Thank you, and thank you for having me. Welcome, everyone. Just wanted to go through some slides here, talk about some of these compliance risks that we have, especially within the indirect tax space. It may not cover all areas of indirect tax, but at least wanted to share with you some of my viewpoints. So here's the picture of me they put on here. And then I just want to talk a second on Vertex. So Vertex has been in the tax technology space for over 40 years. We are the leading indirect tax solution provider for businesses. We do, on here, as you can see, we have over 4,000 customers. We're in greater than 130 countries, and 59% of our customers are Fortune 500 companies. So our agenda for today, here's kind of the topics of where I'm going to talk about. I want to talk about how this area affects on the sales invoice. I certainly want to talk about purchase invoice because often we find that a lot of tax professionals don't put as much emphasis on the purchases that they make, that they're more required or more feel as if they need to be speaking about the sales side. I want to talk about some software solutions, just some solutions that can help with stuff. Audit-ready reports is something that is key when a lot of people look at tax engines and how they're going to do this work. How are they going to report? What information is coming out? And I think it's really key to talk about some of these audit reports and how they affect everything. And then I want to kind of close it up on some decision making. I just want to talk about how as the tax professional, what we have to do and what we do in decision making and how taxes affected our business and everything around that. So these are just 5 areas I want to go through, and it shouldn't take that long, so it should be interesting. So I'm going to start with taxation on a sales invoice, right? When we often look at these things and how we're starting with these titles and the compliance risks, a lot of that starts within the sales invoice, right? It's what you're doing. It's where you're starting with that invoice, right? The first thing that always has to be identified when you're creating sales invoices is it required? Is tax even required? You know, a lot of people will look at a sales invoice and will see tax potentially assessed on there or may not see tax assessed on there. Now, that does not ensure the accuracy of that invoice if tax is or is not on there. A decision has been made to put or not put tax on that invoice, right? So the tax professional that's looking at the products and services that your company is selling has to make a decision on, do we put tax on that invoice, right? So the tax engine comes in place that houses all of that tax mapping, right? So we look at it and you're going to go through that mapping and you're going to determine what is the product and services that I'm offering based on this taxability tree that shows different levels of the products and services are out there to come up with the most accurate tax mapping category that you would use to ensure the tax is right. All these inaccurate or potential inaccurate mappings, right, do cause an increase in financial exposure until it is corrected. Often when something gets corrected is if you hear from the vendor that you are submitting your sales invoice to, comes back and either discovers that the invoice is or is not taxed, needs to be changed, a rate of tax is different, and usually you hear from those customers that have a dispute with that. So then you have to take the opportunity at that point to kind of review that and determine if your mapping is accurate on those invoices. Hopefully, that discussion happens prior to audit and happens more at the customer level. Another area to look at on a sales invoice is new products and services. Your company may be selling the same types of products and services for a significant amount of time. Do you go back, or are there new products that are being out there that you want to look at and determine how should this tax mapping be handled? Is it exactly the same way that we've done our invoices in the past? Do we test it to see if there have been any changes to ensure that this new product that we're selling stays within the same taxability area of our other products and services. So an evaluation of that is required versus just saying this is what we've done. Also, reviewing older mappings, older decisions, right? Your company, and however you're doing this, has made a decision how or how not to tax a product or service, right? What policies do you have in place that evaluate that? Do you go back every 6 months, every so many years? What steps do you take to ensure that nothing within the business has changed and now your tax mapping is differently? We find that a lot of companies that have a finance department with a tax department within finance doing these mapping, we find that potentially sales, marketing, legal, other groups of the company change the dynamic of how they're selling the product, how they're marketing, what they're doing, and how the legal contracts are written. And people don't often go back to see if a business change has taken place. Has that changed how we should do our taxability mapping? So there are key things that I want to just share just briefly about the sales invoice is ensuring that accurate taxation is on there. Is it required? What do you do for new items? And how do you manage a process for old items? And you should really consider having options for all of those. So I want to spin a little bit and talk about the purchase side, right? So purchases, we could be looking then and saying when an invoice comes in, is that invoice accurate? Most times when an invoice comes in, the vendor that we're purchasing those products and services from have or have not assessed tax that's on that invoice. And that's based on their determination of whether they feel if that is taxed or not. But what steps do you take to ensure that it is accurate? You have to look at that and determine how you're going to do an evaluation, right? Again, same thing. This tax engines are going to have the content with the rates and rules about the products and services that you're buying to ensure that there's accurate taxing on there. Now, we know it's not the processing area of the business. It's not the person who approved that agreed to purchase that product or service. It's not the accounts payable person that's processing that invoice. It's not their responsibility to determine is taxation correctly or not. That's not within their role. It's within your role as the tax group to work with them to ensure that when an invoice is presented, that it does go through some type of mechanism to ensure accurate taxation. We also find, too, that most state jurisdictional audits find their errors on the purchase side, not sales. And we know that a lot of people put a lot of emphasis to ensure the invoices that they put out are accurate for their customer, and rightfully so. We have to make sure it's accurate. But you could look at a company and say, we're buying landscaping services, toilet paper for the office, and the person may not have the knowledge to know what is the taxation for this warehouse, for this building, how is these products being used, may not know that information and need some type of tax engine to help them with that, right? The tax engine is going to have all of that mapping in place to be able to help you determine how that should be taxed so that when you are receiving that invoice, you have made the decision that accurate taxing is on there. Take a look at capital assets, right? Capital assets, capital purchases, fixed assets, whatever your company calls them. What is the process that you put in place to review them? We know that that's the biggest spend you're going to have for a company, right? Or anything for capital improvement. For most people, that's your biggest spend you're looking at. We also know anyone who's a tax professional knows that when an auditor comes in to audit, they're going to look at 100% of all new capital or fixed assets that are put into place, right? So why not, as a tax person, have some policy in place to ensure that that asset is not closed and booked as a financial transaction until the assets are reviewed? So maybe the tax department needs to have a process that says, before you book that X million dollar project as a capital expense, let tax look at it to ensure all of those purchases on there were accurately assessed tax. This way, when that asset closes, when an audit does come into play, if it comes into play, you as the tax department can be confident that you've looked and examined the invoices for that project, and you take the risk away of not having accurate taxation on that process, right? So what do you do with these purchases if the invoice is inaccurate? Some people say just pay that, right? You can reach back out to that vendor, determine from them, why was it? Did they make a tax decision that was different or differed from your views on how you were going to use that product or service? Remember, they're invoicing it as their sales invoice, and they believe they know because they're selling it how it's taxed. There is a potential that you are using it different than how they have it, and there may be a difference in taxation. But working with that vendor to understand why they did this or why they didn't do that, you have that conversation. And also remember too, if you get to the point where you do differ with the taxation from that vendor, you always have the opportunity to assess use tax for whatever change based on there, as well as working with that vendor to see if they will see to how you wish it should, or how you believe, should be taxed to change that invoice. All right, 1 second. So I want to talk a little about some of the solutions that are involved with that. So all these potential issues that we talked about can be resolved, reduced, eliminated, words you want to use, by having a tax engine in place, right? It's going to lessen the risk, right? No one can say it's going to remove 100% of any risk because it's all under subject between you, a taxing jurisdiction, a customer, and a vendor. But this tax engine, by having these tools in front of you, right, is going to make the compliance easier for you, right? It's going to help you determine, was taxation correct? It's going to run through reports. It's going to kick out if taxation is different and tell you that these invoices potentially were over a threshold that you built that determined whether tax was accurate or not. It's going to give you the opportunity to look through that to ensure that your risk is significantly reduced because you have a mechanism in place, right? It also, a lot of people look at this and think with new tax engines and automations and new solutions in place that it means that we don't need as many people. We don't need different people to do stuff. Now, that may be true in some situations, but it's also, you need those people to understand and build that information, make sure that taxation is placed, and monitor that to make sure it is accurate. Plus, anyone who's working in a tax department, whether you are the tax compliance person or whether you're a person of responsibility of what's happening, you always understand that there's more work that can be done, more evaluation, more risk evaluation, more checking of how we're doing things to be prepared for audits. That gives opportunity by having tools in place to be able to expand the staff to take on other responsibilities. You may have audits that you're working on. You may know that I'm going to get audited in this jurisdiction every 3 years. Well, let's do a little proactively, right? Let's do a reverse audit. Let's go back and look at this stuff and say, can I go back if I was an auditor a year before they're due? What have we done? Does this make sense? We've reevaluated this. Have we determined any exposures? And then what do you do if you found those exposures? Do you go back? Do you create a reserve to cover for that? Do you immediately make changes on your tax engine so that your decision that was being made now changes the taxation on how you're going to handle the sales and purchases that you make? That's a great opportunity. Exemption certificates. Many businesses both issue and accept exemption certificate from customers. When was the last time you did a review, right? The software solutions keep track of that stuff. It'll tell you when you put that in. When does it expire in that jurisdiction? Help you with letters to be able to get those out, to notify you to go back to these vendors to get updated information. No one wants to go through an audit and having to deal with an auditor to potentially have the ability for them to allow you to go back and get an exemption certificate that wasn't valid at the time of the sale. Having a clear exemption certificate review and reverse audit of your processes through these solutions is really going to limit and make sure that you're able to be able to look at this information and eliminate or reduce your risk with all this compliance. So here's a slide. We're just talking about some of the technology and software, right? Benefits of tax automation, right? The strategic insight, right? Determining, do we have a need for tax? What is that need? How do we have it, right? Improve the efficiencies. We just kind of walked through that and said, putting automation in place is clearly going to make things more efficient. We're going to learn from that internally and externally, both stakeholders, vendors, customers. We're going to learn by putting improvements and efficiencies in place. It's going to reduce risk just by having information in place that's going to be able to prove and auto-calculate, auto-report to you what is happening in your transaction space is going to reduce that. Strengthening audit defense. I just said there's so many options where tools are available for auditors to use to see anything to strengthen your audit defense is going to be beneficial. If you are someone that's used to having an audit happen all the time, and you can find, instead of them coming every 3 years, you found the way to reduce that exposure so that you don't have that risk, they're eventually going to go away because they're not getting the benefit of anything from audit from you. And accelerate their growth. Just being able to allow the department and the company themselves to be able to move forward and do different things within the business, to be able to grow the business because you have these things in place, because you have avenues and processes in place that reduce or eliminate those risks. I want to just touch on the audit ready reports because a lot of people go through this when they get ready for an audit. They get an audit and they're like, what reports do I have? I have to get this stuff. They're scrambling to have this stuff ready, but shouldn't have to worry when you have a solution. There are audit ready reports, right? So many of these taxing jurisdictions within these solutions use these reports. We've talked with many of our customers when an auditor comes in and they ask them what tax engine, what software solution you're in, and they say the Vertex solution. They're like, okay, I understand that. You got to understand these auditors potentially are in these every single day, right? They're doing audits. They're used to using these software solutions, right? What's really good too about it is that there's certain aspects of the solution within these audit ready reports that companies can give to the auditors. They can give them restricted access to parts of your systems. Now, some people are like, there's no way they're touching what I have. I'm going to keep what I access from them. But the ability to be able to give them that information is there. And some of these auditors enjoy having that. Exemption certificate file lookup is one of the biggest things. You have an auditor who comes in from a particular state. You can give that auditor access to that state, that county, whatever that area, so they can go into that exemption certificate and they can look up everything they want. If you have done your valid evaluation to ensure that the certificates that you do have on file are accurate, then you have no problem giving this auditor access to that same thing. It's similar to whether you hand it to them in a piece of paper. By giving them an access, the system limits. You dictate. You're the one who determines in that mappings where you give them access to and let them see that information. So you could look at that and say that's a positive thing for a solution, is to be able to give them that information to see it, which takes away from you having to provide that information. So as well as just the audit ready report for the solution, there's also the standard Vertex reports. These Vertex reports have multiple levels of detail, everything from compliance to reporting on what was a sale, what's a non-taxable sale, what's an exempt sale. It lists all that information. You can drill down, manipulate any of those reports as you wish, or use them as a standard report. You can take a standard report, look at it, determine how you want to use that, right? You may have multiple companies, right? Multiple levels, and you can use each of these reports to summarize, consolidate, however you want to use these reports. And as we said, They do come with a standard functionality, but there's multiple ways that you can manipulate and change the report to deliver the result that you want while still keeping it accurate with the information that's within that report. Okay. So here I wanted to kind of just finish up, and I wanted to talk about decision making, because this is an area that I find that a lot of tax people have difficulty when they're, especially when they're looking at tax solutions, right? I always say that we have to have a tax person at the table, right? When business decisions are made, right? I always go with this same quote: you can't stress enough how important it is for a tax team to know what's happening, right? Anybody who's listening to this now knows from being in a tax department that often tax fines after something's already done. It's already been enacted. It's already in place, right? It's already done at this point. So what's really important is to make sure that you're at that table to hear what's going on, because the decisions that they're making in the company, often they don't look at that indirect tax space to determine how the decisions that they're making are effective. I've seen companies who've moved into an area that has a significant gross receipt tax, but they never align with the tax department to determine, is this the right path for us to move to this location? Not potentially thinking of all the tax ramifications, right? And it's really important that there should be no financial decision, right? And this is something that should be spread out. No financial decision should be made unless tax is involved in that. And I look at that and say, it's really your responsibility. I've heard many people come back and say, well, they did this and they didn't say anything to me. And I've had leaders over time come back to me and say, well, that's your responsibility. And there's many times I've scratched my head and said, well, if I don't know they're doing it, how can I react to that? And what I've learned over time is building those relationships within the company, within those departments that are making that decision, and making sure that you have delivered to them the need of why you or someone from your group needs to be there. Make them understand how the finance is going to affect the decisions that they make. If there's a purchasing group, sit with that group. Let them understand how tax is going to affect them. If it's a senior leader in finance, if it's a CFO, if you start mentioning that we have potential exposures of risks and reserves based on the way we're doing business because tax is not being involved, I'm sure they're going to want to listen to you. Have those discussions, right? Educate those people around you. Let them understand what they need to know from your information so that they can build accurate decisions. Now, you may not be in the decision or the final decision on what they're doing, but at least beginning to have the education with those people who do have it, just so that in their mind, they're always thinking tax is going to be an issue. I need to be concerned about taxes before we make a decision. Hopefully at that point, they're going to loop you back in to be able to say, can you share with us how this would affect if we did this? And maybe it may not be them coming with their final solution, but it's with them just saying, let's kind of talk about this and help us understand what may or may not be some tax implications based on the business decisions that we make. The way I look at that too is we often in tax are in an area of the business that is just doing compliance. We're just doing our piece. We're coming in every day. We know what we're doing on a particular day of the week because this is what we do every month on that day of the week. By coming up with these decision makings, by aligning yourself or others within your group to work with other areas of the business, this is only exceeding your responsibility. This is only advancing you to do more within your company, to be able to share that you understand how tax affects everything within the business, and you're taking a part in that to ensuring that. By working with senior leaders to let them know of some of these risks that are out there and that you have a solution, you have a way to work through it. You want to help develop a process that goes through this to overall help the company, good or bad, within its financial realm of how we're reporting things or how we're doing compliance. It's only going to advance you. And I kind of want to leave with that with you, is that we can go through these slides. We can talk about risk And we as tax professionals every day are looking at risk and how we're doing things. How do we report? Is it accurate? Do we have the information on there? Is this my final version? Have I had someone else review it? But remember, we each control where we go with this, how we work with our leaders, and how we present ourselves to them on the solutions that we work with. Those on here that are leaders, engage with the people that are working with you. Help them understand the risk that you have with what is being used within a tax engine, within its mapping, in its audit, and let them understand the decision making you have to do. Because if they understand that and they're working together as a team on that, they're only going to benefit by understanding and moving the process along. So I hope that this information for you was very helpful. I think that there's probably multiple areas that we can still continue to grow with this. Maybe a future webinar would be for this next step on this, but I appreciate the opportunity being able to speak on here, and thank you very much for listening to me today.
Great. Thank you so much, Larry, for that insightful presentation. That does it for us today. But before we sign off, we just wanted to thank you, our audience, for joining as well. Today's webinar will continue to be available on demand if you want to review anything that was discussed. On behalf of CFO Dive's Studio ID, thanks for watching.
All right, well done, folks. We are clear. Just going to leave some space here before we do end the recording. If there's any notes from anyone, I don't have any on my end, but any flags for things you'd like to re-record, let me know now before I do stop the recording.
No, I'm fine, unless you guys think I need to do something else.
No, nothing at all.
Great job.